I gotta mute some things here now. Okay.
Energy $572 million in revenue for the quarter, beating the 512 consensus. Bravo Echo. Bloom at 43 cents for earnings is on his 9-11 beat. Bravo Echo. HPQ reporting $13.5 billion in revenue. That's right in line with expectations. And Hotel Papa Quebec. EPS at 74 cents is a 1 cent miss for HPQ.
Put the chart there. What's up, AT? What's up, Max? What's cooking?
HPQ in the guidance for next quarter, 75 to 85 cents versus an 85-cent consensus. So conservative guidance for HPQ.
Yeah. Tree, you feeling a lot better about being patient now? Makes you feel a little bit better, right? Let me see. Where is... Mario screen's good? All right, perfect. All right, we'll get cooking here. Hold on. I could dig up stuff while I'm yapping anyway. Okay. All right. Welcome, everybody. How's everybody doing? Hope everybody's faring okay and surviving a little downdraft we're seeing in the market. I think more so in crowded, overcooked names than the overall market. Market down a little bit the last few days, but nothing dramatic. We'll talk about that. We'll talk about, we'll kind of touch on where we left off and just to get everybody caught up on our prior discussions, the last few webinars here, right? We were going into an earnings season where You were facing there was a lot of stuff overcooked to the upside. A lot of the more active names that were seeing the best of flow um, were spoiled in a sense, meaning they overdone. Not only price wise, they were overdone flow wise. And a problem a lot of times that we'll see, I think one of the stronger signals out of flow that a lot of people don't pay attention to. Everybody, a lot of times people look at the flow for call or buy put type signals. But one thing that I've noticed over the course of my career following the flow is that when there's a lack of new ideas being generated from the flow, uh, a lack of uh, risk appetite in a sense in anything fresh aside from some of the best performers, some of the names that have fared well, but already have moved, already have seen a ton of flow. Uh, when you start to see that, it sometimes raises a caution flag. Okay, again, nothing apocalyptic. You don't want to be too dramatic about it, but um, that's kind of been my seatbelt in a sense to be careful. It's a warning not to stick out my neck and continue to buy the same names that are likely overextended and oversaturated in regards to flow, and be patient and wait for either new action to show up, or a lot of times you get some sort of rinse in the market that gets the job done, right? Just based on how, for a lack of a better term, how thin this market has been at times, participation wise, right? I mean, a bunch of guys and I were talking over the weekend. For some of the prior bull markets we've seen, uh, you could all we're almost making the case like we haven't even really seen a true bull market yet. A bull market didn't even really get started in a sense. It's kind of been a very defensive type bull market the majority of the time, with some pockets of speculation, especially around the AI arena, right? Anything cyclical, anything tied to the economy or the global economy in a sense, uh, really hasn't found any footing at all for quite a while now, right? So at some point you need a cleansing, right? You're not going to get it when you want to get it, but that's one of the things you got to find the discipline, the ability to stay patient and wait for things to happen rather than force the issue just out of boredom, right? So that's kind of what we were up against here going into this earnings season. And I think what we've been seeing now is, and the market has done a masterful job. We've been talking about this recently in the steam room and on social media, almost surgically, where this market's done a great job of popping these smaller, more speculative type bubbles, right? In names, whether it's the quantum names, whether it's Max 7, the semis, and NVIDIA when they got too crowded. The market found a way to deflate these overheated pockets while not doing much damage to the indices, right? So there's always been a place to hide. And I think what you want to see here, if you're a bull and you've been patient up to this point and you've been in a high cash position, what you want to see here before you stick your neck out in any aggressive way, you want to see that job finished, right? You want to see it get done here. And what I mean by that is, if you look on the speculative side, on the retail side, they've already deflated a lot of the heat that we were seeing. Okay. You look at like the power names. If you remember, we were talking about like the Oklos of the world, the VSTs, the NNEs, SMRs, the quantum names like I mentioned, the space stocks, whatever it may be. They may have more to go, right? Because they are highly speculative. A lot of them don't have any revenue, no profits in the foreseeable future. So they still can deflate. But what I'm getting at is the last to go, and it's usually alongside the indexes, is the cream of the crop, the quality, right? And I think we're just starting now to see a little bit of signs of a few cracks there, right? You're seeing with Nvidia has pretty much a bang out quarter again. Ridiculous growth, ridiculous numbers, right? But rewind to what we were talking about months ago when the whole space is just overcrowded on the bullish side when everybody's already in the stock. Look at what happened here. The multiple for Nvidia has basically flash crashed almost to the point of mini crash, while earnings continue to grow, while sales continue to grow, data center revenue continues to grow. Their numbers are ridiculous. But the stock hasn't done jack poop over the past 6 months. Okay, and that goes for obviously the whole semi complex because of how overowned they were. So now I think the last spot and where everyone has basically been hiding out are the indexes, right? But you still got a pocket of quality out there that hasn't really been touched. Think of Visa, MasterCard, think of Costco, Nvidia, think of an Avgo, right? These names there hasn't been a shakeout in these names yet at all. So I believe that before we can get what we truly want out of some of this indigestion here, you have to see a shakeout in that camp. You have to see a shakeout in that arena because that's where the money goes to hide, right? When they always have a place to hide, you really don't get that cleansing that we need here. So it may not show up right here, even though we're seeing signs. It would be ideal to show up, right? The sooner than better, but the market doesn't, it rarely likes to do what we want, as we know. Right? We've been talking about some sort of cleansing for a few months now, right? Coming into this year. So, but I think ultimately that's probably going to be the last part of what we need to see before I think truly we can set up the next best entry point on the long side in this market. Without seeing that, I think there's a less risk now because you had some of these mini bubbles deflate. But I still think there's that risk, that overhang. Without that happening, that you got to continue to weigh your long exposure up against. Okay. And you can see the more crowded these areas get, especially on the leverage side, you got levered ETFs in some of these names, the longer it takes for that cleansing to show up, in all likelihood, the more violent it's going to be, right? Because you got more longs sitting in there, and they're all hitting the exit button at once. Okay, so that's what I think ultimately we have to deal with. If you remember, we were kind of using that as an example. Ideally, and we're not talking about a mirror image of the price action, but ideally what we want to see is a somewhat true correction. The only example of that we have of recent is 2023. Okay, and we kind of were looking at that as an example. I think right now I feel we're kind of approaching the point of that first leg down in that 2023 correction, right? Where things are now going to start to show up as, oversold, bidless, right? You're getting that high correlation type sell-off, which that's another thing we'll talk about in a second. That's been a big problem in this market. So I think we're kind of approaching, we'll see where some of the breadth numbers and the internals ended up today after the afternoon sell-off. But coming into today, we weren't there, right? I'll give you an example. I bounce around. Let's look here and I'll show you. All right, so I kind of like to look at this gauge of Sentiment Trader. Gives you a quick synopsis of short-term, intermediate-term, longer-term breadth and internals of the major indices and sector ETFs. Okay, then we're looking at this like as contrarians here, right? So green would be bullish to us, meaning oversold. overdone, and red the opposite. Okay, so a lot of the lows that set up well with short-term sentiment, with some of the shorter-term sentiment that signals that we see bullish, the better lows show up with breadth and internals really washed out. Because what that likely means is that snapback rally, when it does show up, has enough gusto and kick to it, right? Because there's been enough damage done on a short-term basis at the least. Coming into today, you can see we have a little bit of green showing up on extremely, as short-term as you're going to get, some of the breadth signals. But yeah, you still got a little red showing and a lot of just neutral out there. Right? So some of the quality, even short-term lows that set up, I think, a worthy enough reward to try to play a bounce off short-term sentiment. You want to see more green on here. You want to see more green. Why? Because even though you're getting some of the short-term sentiment stuff out there flashing bearish extreme, which is bullish, right? You get these rallies that fail, right? So, if you have enough faith in your trading skills, you can buy off a weakness if you're looking to sell the rip and get out in the nick of time before some selling shows up again, right? But they're short-term indicators, and they're more prone to failing, especially if you're going to get a real correction of some sort, right? In a bull trend, especially early in a bull trend, when you're getting these just little dips that continuously get bought, you're going to see those short-term sentiment signals light up green and bounce like a Spalding off those things, right? But eventually, they stop to work as a trend gets longer in the tooth. You still get some support around those signals, but you don't get a worthy enough squeeze to sell into, right? It doesn't make the risk you got to take worth your while. So again, if we're using an example of recent, kind of like here, right? Here, even though you got some mini bounces here, you had really short-term sentiment start to light up green, but really not as much breadth as you would like, not as much of the other stuff as we would like behind it. But when you got to this point here, you had enough to, if you were going to look to play that short-term snapback rally, be worth your while. Okay, so that's what I think. If you're really looking for to play a snapback move here, that's kind of what you're looking for setup-wise out of this. Right? You want to see breadth there. But ultimately, what a true correction will do is a lot more than that. What a true correction does is not only you're going to get short-term sentiment and stuff like that lighting up green, that's going to be several times. You're going to get the other time frames, right? You're going to get the bigger picture signals, the intermediate term signals start to light up green. Positioning, right? Actual positioning, systematic positioning, CTA short, right? Vol control funds off sides. Right? So you get the whole can of worms out of a true correction. That's the beauty of that. But right now, we're just, obviously, we're not there yet. We're not there yet. We've been selling off for a few days. Okay? So I think that's the way to look at it here. I think on a more tactical time frame, we're likely pretty close, right? So again, even if you're in my shoes, right, and you want to be patient for a legitimate correction, you think it'd be healthy and a lot less risk out there, you'd be playing for something shorter term, right? Just kind of an unwind of what we've been seeing. Keep the shorts true, right? Keep them level-headed. You guys know what I'm getting at. Okay, we're approaching that territory again. I'm guessing now, based off some of the correlation out there this afternoon, it felt like there was more damage being done. We'll see. We'll see. Okay. But again, for me, so you guys know where I stand, and I've been singing the same tune for weeks now, oh, if not longer than that, right? Probably since the beginning of the year, basically. But one or two things got to happen for me to get excited on the long side at this point. And one, either there's got to be some new pocket of momentum that shows up that sweepers are coming after aggressively. Okay, could be a speculative pocket, right? Could be like the space stocks or the Bitcoin miners or the quantum names. Doesn't have to be quality new leadership type names. All right, but I need to see fresh risk being put out there, right? That's ultimately what I'm looking for. I'm looking for new aggressive risk to come into the market. I do not, the last thing I want to see is them buying the dips on the same exact names again. You understand? Which is probably a lot of rolling down at this point, especially of positions that are underwater here. Okay, so that's the last thing. I'm certainly not going to get aggressive or excited off that. So either I need to see some new initial activity show up, plain and simple, or what I started the webinar off with a legit correction. Now it doesn't have to be a specific level. Could be 8%, could be 10%. You know what I mean? But it's probably going to be in the vicinity of 10% if I was to guess. And it's more on the positioning side. We're going to see a lot. It's going to be where bulls have to check that thesis that they've been hanging on to unscathed since basically 2020, the 2023 correction, right? The thesis out there that bulls have been hanging on to and haven't been shaken out, no recession, the Fed has your back, has been accommodative, right? Trump's coming in, now the economy is going to boom, AI even better, that's going to be gangbuster because Trump wants it. All that just got more and more bullish. Nobody was pricing in any negative coming out of Trump or AI or anything, right? So you need that to get checked. You need that to get checked, otherwise that risk never goes away. And if you remember what we were talking about a couple weeks back, we were talking about a growth scare, right? It usually shows up in some sort of growth scare, right? That's usually a term you see start to be thrown around, and you're hearing it already, right? You're hearing it already. Before you know it, the R word is going to start perking up, right? And it doesn't mean it's going to happen, but what happens is eventually everybody feels like it's going to happen, and they give up their long exposure. They get caught flat-footed on the turn, and that's the fuel and the ammo for a new bull market or a new bull run, or however you want to phrase it. And I think, in my opinion, I don't want to get too far out of my shoes here, but I think if it does play out like that, I think you're going to start to see true bull market behavior, right? With consumer sentiment up and stuff like that. Like people, funds, institutions, people buying stocks because they feel good about the economy, right? Or they're betting on a better economy. We haven't had any of that. Right? If anything, people were hiding in stocks because they were fearful of the economy being not good. All right, so that's the story, and I just want to leave off again. I think these things, especially if you're new in the game, if you're younger, and I know a lot of the stuff we talk about here, I get trolled, and falls on deaf ears, but hopefully, even if you're caught here and you're young in the game, don't beat yourself too much up over it. Hopefully it's not too big of a hickey if you got caught in some of these long names. But the market always teaches you these lessons, right? And this is something like I tried to learn early on, because it would happen to me early on. It was very frustrating. You chase these overpopulated names with sexy stories, right? Or sexy numbers, but all that matters is, yeah, how how long is the exposure in that stock, right? How many people know about that sexy story that you're talking about? And if everybody knows about it and the price especially shows it that way, that's where the most risk. That's where you take on the most risk. Again, the numbers, the story, I don't care what you tell me, means nothing. And if you didn't learn that right here over the last couple of weeks, or even more, the last few months, I don't know if you're going to see a better example. All right? Again, Nvidia knocked the cover off the ball, quarter after quarter. They did exactly what analysts wanted the company to do. You couldn't draw it up any better. And the multiple went south while the numbers continue to grow. And if you ask me, what's the reasoning for that? There's only one reason. There's only one reason. Because everybody was long that story. Everybody's already in that story. And we saw that obviously with the more speculative pockets as well. So as long as you learn your lesson from shit like this, you'll be okay. But that's it basically, right? Yeah, we had earnings season, so it kind of was tricky flow wise. The flow, has been sour for a bit. Again, I'm talking about in terms of new buying initial activity. We would see decent sweeps, isolated sweeps, as I like to say. What's been lacking is that appetite, right? If you remember, we talked about that appetite when an institution, right, or a fund or a big player, when they want to get long of a name, okay, they don't hit it just once and disappear. Right? A lot of times when you see that type of activity, it could be hedging, it could be stock replacement, it could be rolling, it could be a legit directional bet. All right. But that there's nothing better than that aggressive appetite. Nothing shows us more conviction and urgency than that aggressive appetite. A lot of times, especially some of the best of that action, you only got to get in the middle of it to build a cushion or trade or whatever the case may be, right? So we haven't seen a lot of that at all. And then you throw earnings into the mix, and kind of skews the flow anyway because you're getting all this hedging that goes on during earnings season. So now we're coming out of at least the heart of earnings season. Earnings season is winding down. The flow has shown some improvement. I could definitely give you a few names that we've seen some action in, to possibly keep an eye on. I think one of the better, more aggressive names has been this CFLT. CFLT. They got GJT in the room pointed out they got a couple things coming up. I think analyst days and stuff like that they could be positioning for. They played April. I think it's March, April, May. A little bit in each monthly calls, and also some 2027 leaps. That was a little bit interesting. All right. And you can see the stock has actually held up well, has been trading higher, even as the market's been heavy here. A lot of you guys may know this name from back in the COVID rally. Am I back now? I think I'm back now. What the hell was that? I don't know what the hell that was about. No, it wasn't coffee on the computer. Um, it was the internet signal just on this PC. I don't know what the hell the problem was. They gave me the slip. They give me the slipperoo. So where did I leave off? I think I was talking about this guy, IGT. There was a July sweep here. They're trying to play a bottom in DHI, a home builder that's been beaten to hell. Well, I don't want to be too dramatic, but has been bidless for a few months. But these are tough, man. These are tough. These are tough. A Freeport, which many of you know, has been seeing some play. Yeah, it's hanging around here, but I think you know what the problem is that if the flow is so isolated, you're expecting those couple of names to trade higher when a market sells off like it did this afternoon. You're asking a lot. Kind of goes back to the point. If you remember, we had the discussion earlier this year. We were talking about the semis, right? And we were talking about how the semis already have been in consolidation, right, for a long time now. Okay, but that's all fine and dandy if the market experiences some sort of correction. I mean, what are the semis going to do? They're going to buck the trend and go higher? I doubt the markets, the indexes are going to correct while the semis are trading higher. That's not going to happen. Maybe they go down less than the overall market. So that's kind of the problem you run into when trying to find individual names, isolated names, while the market is in the midst of a sell-off. Right, you're going against the overall current. But what I think you can do is start either trade, be pretty nimble, obviously, is one, but two, build some sort of watch list and be patient. Right, the more they continue, the more they show conviction and confidence into the sell-off. If they keep coming back, then obviously the stronger the play may be. Okay, especially with time. So, but just I want to make clear you guys are obviously well aware that it's going to be really difficult. You get these like this, you're not for you if you're going to expect to find the one stock that's going to buck that trend, the overall trend. It's difficult. It's difficult. All right. But again, this I think what the point I was trying to get at is we're seeing some very little life in the flow show up again. Where again, it's been a while. It's been a while, right? One more thing I wanted to talk about, which again for me, this is like I can't. It's just one of the things I can't get excited. And again, you guys got to understand, I get put in the perma bull camp, right? Because I'm long only. And I try to be bullish at all times. At all times. By default. Okay? But it doesn't mean I'm going to be foolish. Okay? But it's extremely hard for me to get excited while staring certain things in the face that I know from my experience end up being awful entries, big picture wise. Okay. The other thing that we talked about recently is, and you've probably been hearing it talked about amongst others as well, it's starting to become a little popular, is the correlation out there, right? Or dispersion. You're hearing the term dispersion, meaning that on any given day, this stock can go higher, the indexes are lower. There's no correlation to the indexes, right? And right now we're at an extremely low point. Okay. And usually, okay, sometimes there are other factors that you need to take into account, but those end up being the worst entries. Okay. It could be early warning signals, but a lot of the times that's an early warning signal of some sort of cleansing that's on its way. Okay, let me see if I can find a chart here that I posted recently. Otherwise, on my Twitter, but it's worth looking at. Hold on. Oh, I can search. Let me search. Is this it? Here we go. Okay, there's another one, the tech one, which I'll show you guys. All right. So what this is showing is the higher the reading here, the higher the correlation names to the indexes, the higher things are correlated to each other, right? So I'll give you an example. In a correction, right, what you start to see is everything moves with the market, right, with the indexes. When the S&P 500 and NASDAQ start to sell off, everything sells off with it. When they bounce, that's when individual names bounce with it, right? So you get this elevated correlation where, right, it doesn't even make sense to be a stock picker, right? Because you're just playing the market, basically. Here, right now, we got the complete opposite. Okay, now there's an in-between. The in-between is what a lot of us like, a quote-unquote stock picker's market, meaning that even if the market is chopping around, you can find alpha in names, right? We've seen that pretty often of recent in the last few months, okay? But what we have now is we have the total opposite extreme here. And if you look back, the risk is that you get some sort of pullback, right, downdrift in the market where correlation starts to elevate aggressively again, and you get your teeth kicked in, right? My favorite entries, the best entries as a long only player in this game, have been when correlation spikes and starts to roll over, especially from extreme areas, right? You think of every major low in the market, every major turning point, you've had a spike in correlation and then the unwind of it. Okay. And that's why I make the point where you come into a week and you see 4 or 5 good looking bets out there, right? Good looking aggressive buying in names in 4 or 5 different names. And you literally could throw a dart at any of those 5 names and there's a good chance you're going to make money. Right? So you got the wind at your back. Right? We've been dealing with the complete opposite, right? Where there's a good chance that you may be right that the market may bounce next week, but your stock may get killed. That's the type of climate we've been dealing with. Right? So on a risk-reward basis, that's atrocious. That's the complete opposite of what we want to find. So that's what we're dealing with here, right? You can see on this chart here. Okay, we got to this point a few months back, and then we had some, right, correlation started to elevate, not to any major extreme, right, top down, and then the unwind, we had a good runway for a couple of months where you had some broad participation. Right now, again, it's the total opposite. And the risk is when this starts to happen, when this starts to turn and elevate on the opposite side of that sweet spot that I'm referring to, you can catch a big beating. A big beating. Okay? So this is the S&P 500. And I have the NASDAQ one that's pretty interesting too. Hold on. Let's see if I can find it here. I know I posted it recently. Here it is. All right? So, again, the point I just made, right? Here, in these highs, you're at a low point. Okay? Market doesn't top exactly at that low point, but early warning signal that here's your risk, that this happens, and that's what you get. Tops out, rolls over. Again, that's the sweet spot. Boom. Right? Same thing. Here, COVID. Spike. Tops out, rolls over, boom. Now we're down here. All right? Again, even on a smaller scale, into these highs, extremely low point here. This is just tech, by the way. This is just tech. the chart we're looking at here. But into this recent high here, late last year, okay, you were at a low point, started to elevate, right? You had that downdraft, then topped out, the unwind. You had a nice little kick there for a couple months. So obviously, the bigger the unwind, the better, the longer the kick. All right. Again, just another thing that I'm staring at and have been staring at this year that it makes it really difficult to get excited about any longs here. Right? So that's the story. Anybody have any questions at all? Some of the other things we look at just quickly, you got hedge funds, right? Here's what's going on in hedge fund land. Pretty interesting, but I think they're starting to short again. Hold on. Here's hedge funds. Hedge funds in single names, if you remember, they've been short a lot of this rally, right? And we talked about that tug of war recently. Remember, retail is excited on the long side and hedge funds are not. So you can see here a little bit of a move, right? They flipped to just slightly long, but they're not short anymore, right? They're not net short anymore. So again, you lose that. That was one of the more bullish things out there, and has been that way. You can't really hang your head on that anymore if you're a bull. So what you want to see is this come down again, right? You want to see hedge funds start to get aggressive on the short side again. They could get caught, add some ammo for a squeeze. Let's see what else. Retail's getting pretty beat up here. So I wouldn't necessarily be too concerned about retail right now. This is what you're seeing, and I think we talked about this. It's amazing, but this is what some of the perma bulls out there are really pounding the table on. Okay? And again, you got to understand who you're talking to here. You're talking to a glass half full, sometimes referenced as a perma bull. Okay? But the AAII sentiment, if that's what's getting you to ignore everything we've been talking about the last couple of weeks, I mean, you're just not familiar with some of these measures and indicators. Like, this is your run-of-the-mill, plain vanilla, traditional survey sentiment, right? Everybody in the business follows this. Everybody. Weekly sentiment survey, again, works really, really well at market lows, but also you could have got your rear end handed to you at some lows as well. Okay, it's not bulletproof. But what's interesting is you got some of these, like, this is a mom and pop. Think of it as a mom and pop investment survey. Okay, and you can see there's concern, right? They're pretty concerned, probably because Trump, tariffs, and all that sort of thing, I'm sure. Okay. But as far as positioning is concerned, you're not seeing this type of fear out there, especially yet. Now you're seeing it in some of the stocks, right? Some of the more excitable names that retail has been in. But I mean, come on, let's not make it out to be like people are suicidal off the market action right now. You still got Bitcoin at freaking, what is it at, 90,000, 85,000? They're still knowingly, this generation still knowingly wanting to get involved in pump and dump meme coins. Knowingly, they're pump and dump and want to get into pump and dump meme coins. They're trying to scalp pump and dump meme coins. I can't believe I'm actually saying this. All right? So retail has become scalpers of pump and dump fart coins. That's the world we live in right now. Okay? So let's take it easy with the the fear greed index is at extreme fear. By the way, hold on, I gotta put this on live chat too. That's another thing, right? Like the fear greed index. Okay, just so you guys know what you're looking at. And it'd be nice if some people who talk about this measure actually look at the makeup of this measure so they know why it's so fearful. Okay. Now, again, prior to the last couple of days here, right, we've had a little more fear come into the market as Nvidia has broke down and some of the other things. Okay. But they've been talking about this extreme fear in this fear greed indicator for the past 2 weeks. Okay. This is not positioning. There is no positioning in this makeup of this indicator. Zero. How do I know? Scroll down and look at what the indicator is made of. Look at the makeup of the indicator. So market momentum is one of the characteristics in this indicator, right? So what's the worst group, right? The momentum group on the street right now, right? That's been the most hard hit group over the past couple of weeks. Okay, that's why you're getting some more fear than usual. Stock price strength, that has nothing to do with positioning. Nothing. Okay, these are more of internals than breadth. This is not positioning sentiment like some of the people who use this make it out to be. All right, so here, breadth. Okay, the lone thing you can argue has true sentiment or positioning characteristics at play is the put to call, which just now is starting to become a factor, getting involved. Right, we were at an extreme low up until this week, but that's the only thing, and that's a pure volume based indicator. Right, all the put to call indicator measures is how many puts and calls trade for the day. Doesn't tell you how many of them were bought. Doesn't tell you how many of them were sold. Doesn't tell you anything. Just tells you volume-wise how many puts and calls traded. Okay? Reason people look at it is a lot of times at market lows, you will see like an equity put to call up near 1, volume-wise. Okay? But all it is a volume indicator. And then the VIX. All right, so you got the VIX and some bonds here. Look at the makeup of this in there. So you know. Okay, there's nothing here that takes into account actual equity positioning. Yeah, it may not matter to you, all right, but when you're using this as an example of how fearful everybody is out there, let's take it easy. Yeah, let's take it easy. So that's that. I think I said my piece. But that's what you're seeing a lot of perma bulls, right? Who don't even look at positioning and sentiment. The only time they look at it is when they pull up the CNN fear greed indicator. That's the only indicator they look at, But that's what you're seeing. A lot of perma bulls. They've been pumping for the past 2 weeks. Market at high and fear and greed. Oh my God, that extreme fear. Buy the highs. Right? Buy that. Buy hymns. So that's the story. Anybody got any questions? Let me see what's going on here. I see a couple comments, but we had a little hiccup with the technology. T says she exited Freeport. Yeah, again, I think you would be okay. I think again, I don't know, T. I don't know. I told you when we were talking about it last week. I get the argument for being long if you're looking to roll the dice, but it's tough to really get excited about it. Now, if we do get kind of a market bounce off oversold breadth and extreme short-term sentiment, bearish sentiment, maybe you get a decent bounce at a Freeport, and you could hop on the momentum for a trade. But it's tough. It's a tough trade. It's a tough trade. So I don't blame you one bit for getting out of there. What else? Anybody else have any? Yeah, we had a little flash crash with the computer. If we don't get a bounce here, can we assume something larger at play? That's a great question, Max. That's a great question. You know, it's a tough question. It's a tough question. I've seen and I don't know if this is what you're getting at. Correct me if I'm wrong, but I think right now we're at a point. And again, we'll see when things update tonight. We'll have a little more information. Okay, but right now we're at a point where just the short term stuff is bullish. Okay, and to answer your question, have I ever seen these things fail? No. Yes. Okay. If you play them all, if you play all these signals, you will have a hell of a lot more wins than losses. That I'm sure of. Okay, but there will be a point, right, after a trend gets long in the tooth that they fail, and usually it's not a sign of something cataclysmic, but it's a sign that there's some real selling pressure there. But things like this, the short-term ones can linger and be out of water for a few days, and then you get that squeeze. Like, I'll give you an example. This maybe a picture will do it more justice than the way I'm trying to explain it. Like, you see this 2023 correction, like we've just been kind of using it as an example. Okay, you had short-term sentiment lighting up bearish extreme. Again, short-term sentiment around here. Okay, so you had some more selling, right, through that downside niner and all, but then at this point you got enough of the breadth internals, you got enough of all that other stuff washed out as well to where you get some sort of relief like that. You understand? But I think the risk is there is you want to trade it because without getting some of those bigger picture positioning signals in your corner, you run the risk of this, right? So you got a tradable squeeze here, right? But ultimately it rolled over and failed, right? It wasn't the start of a new trend. Okay? So that's why I'm making the point, like, it's okay to try to trade these because, in corrections and in bear markets, this is what, if you're looking on the long side, you have to trade these because that's the only places you're going to make money. Okay. But ultimately, what we want is again, don't look at the price action, but we want this setup. And meaning that at this setup, it's not just short term sentiment that's lit up extreme bearish. You got positioning across the board from systematic to hedge funds to retail, everything lit up extreme bearish. You understand? And then when that turn comes, at that point, you got enough ammo there that in all likelihood will set up a really nice, either again new bull trend or start of a healthy leg higher. All right. So I think we're still in, obviously, it's a little early, but we're still in. We want to, if we're going to try to catch a low, we want to trade it here, right? We still want to be traders here. Okay. And I think even here, right? Even here, right? Even though people thought this was going to be some runaway new leg higher, okay, you still, I think, wanted to be a trader here. Because again, you didn't get enough of a cleansing to set up that healthy risk reward for a new leg higher. These turns, they always come when positioning gets lopsided like that. You understand? Again, it's a real gut check. It gets everybody to second guess what they've believed in for so long, and then they give up on it. And then here's the kicker. Once they give up on it, it's not that easy for them to get back in it. You understand? Because they've held on to it for so long that once they give up on that thesis, they continue to watch this go higher because they can't get back in. It's like you're with a guy or a girl for 5 years. You know what I mean? You break up with them, and then it's like, yeah, I'm not going to get back with them right away. But, that sort of thing. It's not that easy. So you have that where, again, it adds fuel to the upside. Yeah, again, and we'll see. Listen, it's impossible to predict, right? As much as I would love to look at this 2023 as an example and say this is exactly what to look for, this game's not that easy. You guys know that, right? So you got to kind of just be prepared and react. If you get an exogenous event like COVID, it can happen like this, right? You get a crash type environment. It happens violently, it happens quickly, and it's over with. Okay? But if you get a more methodical type of correction, usually it has like this type of flow to it, right? First leg down, little relief, bounce. Everybody thinks everything's okay again. That fails. Another bounce, right? And then ultimately this nobody believes in. And that sets up the goods. So it can look in a variety of different ways. Oh, what the hell's going on here? Well, yeah, it doesn't have to be anything apocalyptic. Without an exogenous event, it probably won't be anything apocalyptic. All right? Without some sort of catalyst that comes out of left field, it's probably more orderly than not. I think what's been not orderly of recent is some of these overextended hot areas. When you got names that do make, that run like this, okay, it's going to feel chaotic. It's going to feel spooky when you're looking at names like this come in, right? Because they've gone parabolic. So, they're going to take that same flight down, a lot of these things. But overall, it's been like you pull up, you look at the indexes, we're not even in pullback mode yet. Like you said, this is more range bound trading than anything else so far. Yeah, and Bitcoin, Bitcoin just started to crack, right? Bitcoin too, people calling for 500,000, and again, listen, even the Bitcoiners, you got crazy corrections in this. They never let you sit tight and just count your money. So, yeah, you still north of 80,000. I think if you're holding Bitcoin, you got to thank your lucky stars there. You still holding TEM? Yeah. I still have TEM. Again, I didn't sell it on the upside. I'm not going to sell it. I mean, you guys know what I did with TEM already. TEM is kind of a tuck-away name for me. That name. I have some stuff. I'm not in 100% cash, but mostly like very light position runner type stuff. But yeah, TEM I want to hold on to. I got on like RBRK, which made money with, that I'm holding on to. So names like that I'm just not going to sell. They're longer term plays for me now. CEM saying we're going down 15%. What's CEM? What the hell's this? What is this, Phil? I don't know what the hell this is. Cementier Holdings? I don't know what that is, Phil. Did you cover CTA selling? Yeah. Well, I didn't cover it, but generally, what we want to see out of the CTA front, and let me show you guys a chart. Hold on. Hold on. Trade composite, you're gonna, if we get we'll probably be under 10. That's usually a decent turning point on, again, short-term basis, right? Hold on, let me see where that CTA chart is. I'll show you a good one. Oh, you know what I'll do? Hold on. Oh, Chen, the option guy. I know who you're talking about. Yeah. Oh, he's saying he's saying we got another 15%. I'm looking at the stock, the ticker still. You nut job. Oh God, you're killing me. Yeah. So he's saying 15%. Certainly possible. I don't know. What he's looking at coming up with that number specifically. I mean, is he looking at some sort of option shit, positioning shit, or he just thinks we need that type of cleansing? Probably flows wise too, right? But yeah, I know. I like Jim. Jim's good. He knows his shit. Where's hold on, I want to find that chart. Here. Oh, that's not the chart. But I want to show you a chart here. Here it is. That's not. All right, so this is systematic. Who was asking here? Tenor. This is systematic funds as a whole coming into the week. All right, so if you put them all into one bucket, so they obviously have room to do some selling. But here's an example of what I was talking about, Tanner. Up here to the right, can you see that? Let me see. Do I have a better chart than that? No, that's the best one I got there. Hold on. Okay, so if you see this chart up to the top left, I'm sorry, did I say right? Top left? Okay, this is measuring CTA exposure to just equities, right? So now you can see recently, if you remember the last pullback we had, which was minor in the market, they came down from 70% long to, almost 30%. Okay, so that's a little bit of a rinse. Okay, that's a rinse. That's a legit rinse. And what happens is if the market, right, if the indexes start to turn and VIX rolls over, they have to put that exposure back on, right? So they can ante up from 30% back to 70%, which they've done. Okay, but that's it, right? They kind of run out of room. They top out here because of a lot of macro stuff. Basically going over that 70% threshold. Okay, but ultimately, the true cleansing, again, that legit correction we talk about, gets them short, right? So that's what we want. We want this. Okay, this is the 2023 pullback. I think it looks like it. The correction we were looking at. So you see how they went from long to basically aggressively short. And again, the market doesn't have to stop on a dime right there and then. Sometimes the downside could overshoot. Okay. But when that turn comes, you have a lot of ammo, right? You got an empty tank that you can fill up. And again, those entries, they're just nothing better. Right? And what now the market these days, because this information is it's out basically for everyone to see, the market likes to front run that. All right. So ultimately, that's what I'm looking for out of the CTA camp, for them to get short. If I was to guess now, some of the levels just broke. They've been leaning to the sell side for the past week. So, and that's another example, Tanner. Like you had a market. Here's the CEM, by the way. You had a market that basically was at new highs, but CTAs were still leaning to the sell side, meaning that the CTA flows, even though the market was at new highs, CTAs were going to do selling in a flat tape because they already are long. So they would do a little bit of selling in a flat tape. When they get short, okay, like the example I just showed you, they're buyers in a flat tape, they're buyers in a down tape, and they're buyers in an up tape. Okay, when they're that short, they're buyers in all sorts of tape, and that's an added bid that comes into the market. You know, so that's kind of again what I'm hoping we get out of this, and when and if we do, I will let you guys know. I will let you guys know. But we're seeing some of the effects of CTAs in the current market. Some of the selling. He's a bear. The Bears. I think he's out of Chicago too, if I'm not mistaken. So he fits in perfect. Man, if the PCE is hot, yeah. I mean, if a hot PCA could get really, really interesting because you got again that growth scare come into the equation here, and if you got a little bit of inflation starting to perk up, you get that stagflation, and the market's not going to like that, right? Because it kind of puts the Fed in a bad spot. Um, but again, it may not be. It's not the worst thing in the world, because a lot of times you think about it these days. We get economic data every day. We get news to digest every single day. So a couple weeks of some indicators going one way or the other, everybody likes to jump the gun, right? Oh shit! A couple of the economic numbers came in light. Recession. Here we go again. But ultimately, those growth scares, they're awesome. They're great. Those are where you want to look to get long. Again, when you don't get them and you get a market where they buy every little dip and there's no shakeout at all, and you just keep reeling in more bulls, more bulls, more bulls, um, doesn't make the backdrop any better. It adds more risk. Again, I want you guys to understand that because I have been cautious, but I think if we do get a true correction, I really do think um, it it could be a setup for probably better than what we've seen market wise. I know that sounds crazy. Now, again, I don't have a crystal ball, but the reason I say that is because it's been such a defensive bull market we've been in. Hasn't been really a risk on bull market. Again, you've had pockets from retail, the Bitcoin and the fart coins and all that stuff, but I'm talking about equities. The IPO market's been dead, right? We talk about like new leaders. There's been so little of them. That's why you got these mini bubbles showing up all the time, right? That's why you got these stocks like APP. After a few good quarters, you get everybody piling into them because there's just not enough of them. So, I don't think we really have seen like a true risk on bull market. And if you get that growth scare correction and that fails to materialize, and then you get some economic growth, right? So think about that now. You get a growth scare, and potentially you get the Fed back now on your side, a little more accommodative. And then some of these Trump policies start to work out, right? You see the fruits of them. Right now, nobody was pricing in what he said he was initially going to do, and that was wave the tariff wand, tighten the budget. Or that's all that stuff is not bullish initially, but the market ignored it. So I think if people get too bared up and it happens quickly, you have a runway for a setup for something extremely bullish. I really do think. Yeah, it's not a prediction, but if you have a scenario that can turn out that way, that can be extremely bullish and possibly the next best entry here um, that we see on the long side. I think what we don't want, okay, is just this again. In my opinion, you don't want, okay, because what happens is if you don't get that true cleansing, it won't be long before you end up back in the same spot you were over here and over here. right? If you don't wash them all out and instill enough fear to get them out of the mix, right? They survived. The longer they survive, the more reluctant they are to get out, right? Then you get a scenario like 2000, okay, where they survive the pullbacks and they were a lot more vicious than this. And then ultimately, in March of 2000, the downdraft started. They never wanted to get out. They held all the way down. You know, JD, I feel you. I feel you, brother. I feel you. I totally get that comment. You know what I mean? I totally get you. I totally understand why you would want to see that. You know, especially, how crowded some of these areas have been. Here's the thing. I think the true test, right, is going to come when I told you when they hit, what do they call them? Like the soldiers? What do they call them? The generals are the last to go? Is that the old market saying? The generals are the last to fall, right? So I'll give you an example. In late 2018, if you guys remember, okay, you had an awful market under the hood. Awful. The internals were awful. Breadth participation was awful. Everybody was just crowding into FANG. Remember FANG? Okay. FANG and the indexes, right? And the indexes were fine, right? And held up. But ultimately, right, even this downdraft, like FANG and the indexes were holding up. You just had a little bit of pullback and they were safe. They survived. This, and it doesn't look like much, but if you were around during the holidays in late 2018, you know exactly what I'm talking about. Okay? This is what scared the poop out of everybody. And down here, you name it. Name a positioning reading, name a sentiment indicator, name it. Put the call, Bova Bull Bear, name something you want to see flash bearish extreme, and it did into these lows. While Mnuchin was on the phone Christmas Eve calling the banks, do you have enough capital? Do you guys remember? All right? We have word Mnuchin is on the phone with the banks during the holidays here, sipping eggnog, making sure the liquidity's there. Yeah. Right? And, if you look back, especially charts, they never, like I say, they never do it justice. But, looking back at late 2018, what was it really, right? Like, nobody looks at that as some big calamity. But look what it did here. You understand? Anybody who was bullish and hanging on gave up. They had to. This thing felt like there was no bid. And then you had, during the holiday season, no volume. So people were like, oh my God, this market's going to crash during the holidays. Nobody's even around. So to JD's point, right? Like he's saying he wants to see that panic ultimately, because that'll get the job done. I totally hear that. I totally hear it. But sometimes it could be a little more orderly, unfortunately, and you gotta be ready. It's a lot easier to be ready and prepared when you're not holding a lot of weight and taking a beating. You understand? When you're holding long exposure and you're trying to hold a lot of weight through and getting beat up, you just never could see it when it shows up. When the signals start flashing. So much more difficult. It's hard enough as it is. Thoughts on safe house play Carvana going to 300? Like, is this thing still like why it's running here? Are you kidding me? This freaking thing is running in this? Oh, I don't know. Oof. I don't know. Look at this thing. Unbelievable, this thing. But you got a lot of shorts here. That's why. They like to squeeze the daylights out of them. Um Tobias again, I don't know. You're going to get that again that bullish sentiment slash breath rally out at some point. We're getting close. And this thing obviously is heavily shorted. You could see a nice bounce, but yeah, I don't know, brother. I don't know. And Tobias, the type of names I'm hoping to see by the time this is all said and done. GameStop is, yeah, GameStop too, right? They're turning into crypto. Yep, 24. I mean, this looks calm, so compared to some of these things. No, this is like calm waters, GameStop, to some of these things. But like I said, guys, I think if you're a bull at heart, like I've been saying for the last month plus, if you're a bull at heart, even what we've seen up to this point, you want to see this. Okay? If you're a bull, you get nervous when you see things like HIMS, APP, and all this crowding going on and people hanging out and talking about the same stocks. You should get nervous if you're a real bull when you see that. Just those things being deflated should make you feel better right now, no matter what happens from here, because it had to happen. The longer it went without it happening, the worse it would be. Somebody asked, what's left? I was kind of like thinking about that over the last weekend. We were kind of like going over names. It's that, think of it as the indexes and the quality bucket, right? So some of the names that are just quality names with real earnings and real growth, but just are over owned and have not had a correction, right? Again, a couple of guys quoted Visa. Look at this. All right. MasterCard. Now, the financials have been the new leader, right? For months now. The financials have been the spot. But these things, they're hiding in these things now, right? Or here's one that's not a financial. Costco. Look at this. I mean, this has been an ATM machine, this Costco. Just ask Ronchero. He'll tell you. I think he's on like his 2000th roll at this point. So it's this bucket that's really concentrated. That anytime the market looks shaky, they hide in these things, right? The Meta, but that's starting to show a little bit of. I mean, come on, that's not even Meta. You could put that in the same camp. Look at Meta, right? Again, this is an easy ride, guys. When you get easy rides like this, okay, eventually a correction shows up. It goes bang. What you think because a company is has that good look? It's that solid fundamentally. It can't do that. They all do this. They all do it. So it's stuff like this, Sahil, that I think they need to break. They need to break these things. And they're going to be the last to go. They're going to be the last to go, as they should be. As they should be. Because what you've had recently is a lot of pair trading, long Meta, short, whatever, APP, short this, short anything that's weak, right? They get long the indexes, short some of the speculative stuff that's overinflated. So it's that long side of even those pair trades that they got to break. They've been working too well. They've been working so well. So that's it. I think once that happens, you'll see kind of somewhat of a panic in the indexes as well, and I think that's going to be the last sign. Yeah, right. The equal weight compared to the right. I mean, look, and you have look, you have periods, right? Like, look at this. So you're right, JD. You need to be selective on lifeguard only, saving the strongest women. Yeah, but Tobias, I agree with you. But here's the thing, okay? When you get a real correction, there's no such thing, okay? Because what happens is forced margin selling, and they have to sell even the stuff they don't want to sell. You understand? So no matter how good the company may be, it's just semantics, just more sellers than buyers. You understand? And when they're crowded with longs, it's even worse because you have even more supply. That's ultimately what it comes down to. I agree with you 100%. Like Meta is a stud, Costco is a stud, Avgo, Visa, Master, they're all studs. They're all cream of the crop. But eventually, when people go there to hide and think they're bulletproof, there's nothing bulletproof. Mark my words, I'll tell you from experience, and you probably know this already, Tobias, but nothing is bulletproof. Nothing. There's no such thing. How quickly people forget like a Meta. And by the way, I'm a long-term shareholder in Meta, okay? So I could tell you some of the worst at times, okay? People forgot, like this stock was on the cover of Barron's like they were going bankrupt not too long ago. And now you look, right? Now everybody's hiding in this thing like it's bulletproof. And it's got nothing to do with fundamentals, guys. Right? I gave you the NVIDIA example earlier. It's got nothing to do with fundamentals. Okay? It's just normal, again, market dynamics. The defensive names have been awesome. Even some of, like you guys are pointing out, ABBV is a stud, right? We've talked about this name for a long time. If you're in the steam room, almost every correction in this name is a buying opportunity. That's what kind of stud you got in this ABBV. Now, it usually does best when like the defensives are in vogue, and that's what they are now. Okay. How about this? I got one for you that they've been buying, and they bought a little bit more today. The old Widowmaker. Look at this thing. Gilead. All right. So they've been buying these things now, for a few months. Silla's been pointing out almost kind of like quote unquote recession protection. You know, but Gilead. You talk about a stock that's been through the ringer. This thing was the worst stock on the board for a long time, and it finally broke out here. A few other names. A couple of you in the steam room have been playing J&J and things like that. Look at J&J; they're on its hat. But honestly, I don't want to get too crazy here chasing these things now. Like I didn't have the coconuts. I wanted to play the staples. I don't know if you guys remember we were talking about just based off where positioning was at and based off a potential recession, a growth scare type thing. I off the pullback, I like the staples. I just couldn't get excited about it. Do I buy the ETF? Do I find the name? But again, the reason you got to be careful chasing them is they've run here a good amount. They've run a good amount, and these guys too. When selling shows up, that forced selling, you're going to see these things find sellers as well. So again, in my opinion, when you get into this type of market environment, you dabble. You can dabble in things, right? Especially if you're in a high cash position. But there's nothing better than sitting, being patient in cash, and waiting. Nothing better. You're going to realize that you're going to, in my opinion, again, this is just my opinion. You could ask other traders who are more active, a lot more active than myself, and who have been in the game just as long as me. They may sing a different tune. But for me, I had to learn how to be patient and to sit and wait patiently in a high cash position to ultimately do what I need to do in this game. Okay? If I tried to trade through what was quote unquote downtime from my style, yeah, it was always a donation I was making. It wasn't worth it. At best, it wasn't worth it. So you learn eventually that you're going to have to find that discipline to sit and wait and allow the setup and that fatter pitch to show up. Other traders will say, well, no, I hop on the short side and I start shorting. And then when the time comes, I cover and then I get long. If you think you can do that, good for you. I can't do that. I'm sorry. Okay? I'm not ashamed to admit it to any of you. I cannot do that. I cannot get all bared up, aggressively short, make some money on the short side and get a taste of the dark side, and then flip long when I need to flip long and get aggressive on the long side. I can't do it. I can't do it. Again, if you do a little of it, you know what I mean, and you're trying to just keep yourself involved while you're waiting, and you think you could do that, that's, again, nobody, you know yourself best, right? But there's nothing, in my opinion, especially for some of you newer to the game, there's no better position to be in than sitting in a high cash position and being patient while you're going through stuff like this. There's nothing better than that for anybody who's newer to the game. Some of the more experienced players out there, it's a different story. They got more experience. They know themselves. They know how they're wired. But again, that's just my 2 cents for anybody who may be on the newer side. Do you buy Stavro? What's up, Stavro? I like Stavro. I sit, even if I dabble. Let's say if I buy TLT or I end up buying some gold. Let's say I like gold at the time. Then I may dabble, but I'm not going to get. In other words, I'm not going to make a big hit off it. You understand? I'm not going to size up and try to make a killing off it. Basically, my outlook is looking to get through the time, right? And having the ammo to fire when the turn comes. That's my goal. All right. So if if you like TLT and you want to buy some TLT, while you're waiting, if you like it, there's nothing wrong with that. There's nothing wrong with that. But I think the name of the game, the most important thing, right? The goal is you want to be able to have a clear head and the bullets to fire when you start to see the things that you were looking for show up. All right? So for a lot of us in the Steam Room, myself, when that bearish extreme sentiment positioning shows up and then sweepers are starting to get aggressive, right? I want to make sure my eyeballs will see that and I have the ammo to fire to get involved. Okay, if I'm involved in other shit, too much shit, you can see how easily distracted you get, right? Especially if you're, let's say you're short. You can see how that could be a problem, right? Let's say you're short and you got a little bit of size on and you're making some money, right? You're going to make money in this tape on the short side, no doubt about it, right? But now that you make some money on the short side and you got that bias, even when you start to see some constructive signs, you don't want to believe them, right? Because you're raking on the short side now. You're making some dough. You want it to stay bearish. So you ignore a lot of stuff that you wouldn't ignore. So again, it's knowing yourself. Everybody's different. No problem, Stavro. We got Stavro from Greece here, live from Greece. Greed is telling you to buy right now. The last 4 years have been amazing. Greed? Oh yeah. Well, again, you can't blame dip buyers, but eventually they get torched, right? It's always happening. Yeah. See you mañana. Have a good night, yeah. I just think of Ranchero going all in on leaps with the last 5K. Yeah, and like again, that's when after you come out of corrections, that's where you can really pick up some big money, especially like Ranchero leaps and stuff like that. You know, where do you think those opportunities they come out of corrections? They don't come at market highs after 6 straight months of upside. In retail euphoric over quantum names. All those opportunities like look at here, Costco. If I'm not mistaken, if I remember, right around where like Ranchero played the Costco. Oh, come on with this dumb thing. You're talking about coming out of here. Look, okay. Right? So this gave birth to that. Right? So that's ultimately what it is. And you have a good amount of stuff to my point, right? There's a lot of this market that looks like this. You know what I mean? A lot of cyclical names, a lot of semiconductor names, a lot of things look like this right here, don't they? So I believe like once you get that legit correction and rinse, ultimately it sets up to get out of this. Where these things you can find entries to get out of it. I think with that not getting a correction, that overhang risk, that's always that risk that's kind of on top of your head. And listen, then they don't. I mean, they don't all turn out like this. So don't think you're. What's one thing, catching it and holding it is the whole other fiasco. But just the point I'm making is that some of your best entries on longer term stuff is going to come out of these bases, like these corrections, these breathers. But again, listen, one step at a time, and I'll leave you at this, okay? And I think this is the prudent way to go about it because you never know what this market's going to bring. We don't have crystal balls, right? We're getting close to a point, like I mentioned, where they're going to squeeze shorts, right? So if you think of like again, we're using the 2023 example, right? Something to this effect. Okay, let's see where like a lot of those internals, what they look like when they update tonight, and we'll take a peek. If there's enough green on there, you got short-term sentiment comp under 10. We can look to take a shot to catch. This is something worth risking. Trying to catch, or even if you don't want to like front run it, again, be prepared for it, right? if we start to see some bullish and constructive action going into next week, you can hop on the momentum there. There should be, in other words, there should be a worthwhile reward here, right? Like many of you may not think this is worthwhile, but this is basically up to an upside niner. That's a that's a nice rip. That's a nice rip. So we're getting close to here. We're getting close to here. Do we see, is there, like some of you are saying, do they puke them all up with a hot PCE tomorrow and everything breaks and maybe sets up a real nice low? Or does this show up? We'll see. But that's kind of what we got to be ready for. And then I think ultimately, big picture wise, no matter what, we want to keep tabs on, for those of us in the steam room, in what they're buying. It's going to show up in baby increments here and there. We're seeing a little bit of action in names. Again, you may not like some of the names showing up right now, but it's worth building a watch list, track them, right? They keep coming back for it. Maybe you do a little due diligence. You end up taking a liking to the name. Right? So the more that type of action shows up, the closer we are to some sort of low floor, even if it's just on a short-term basis, right? Just the last example again, because sometimes I can't put the best explanation into words. Okay, let's say we take the 2018 analogy, right? The late 2018. Again, just as an example. I'm not saying this is 2018, okay? But you could set up something like this, right? Before there's another leg lower, ultimately, if the market needs to go lower. But in this, there's going to be some money to be made on the long side, trading-wise, in names. You understand? For whatever it may be. A couple of weeks, a month. So at this point, I think that's what we need to be looking at, right? I think the short side becomes dangerous here. There's a lot of risk on the short side at this point, right? I don't think you could short here with a clear head. At this point, there's job numbers too tomorrow and the PCE. Yeah. So the economic data is definitely going to be paid more attention to. So and the other thing too, guys, it doesn't have to be a calamity. It could be just more of this, where very surgically they take care of what they need to take care of. Maybe that quality bucket they attack next, and there's enough rotation to where the indexes are just soft, but there's no real panic. It's very possible. I mean, if you were to tell me they were going to tear Tesla apart, they were going to do this, they were going to do that, they were going to break up the Mag 7 trade, they were going to pop every speculative bubble, and the indexes were just going to look like this, I would have never thought that. Right? If you told me what all these names were going to end up looking like, I definitely think we were a lot lower than where we are here. It's been masterful how they've done it. Masterful. So maybe there's enough rotation where they keep the indexes somewhat bid, and it's more of a choppy lower range, right? And that gets the job done. So, I think, that's a good point. I think, and the JP Morgan trade desk, had a good note on that. That I think, what is it, post OPEX? I think like the second week in March, right after you get something like this, usually you get some relief low there, right? A decent floor. But this could be something, guys, unfortunately, that we have to deal with And it's almost like a correction through time, even more than price, to really frustrate the living piss out of everybody. Right? That wouldn't shock me either. That wouldn't shock me one bit. So keep an open mind, right? And I think, again, the things we want to keep tabs on, we want to keep tabs on, obviously, the aggressive action, the appetite more so behind the action. That's going to tell us a lot about momentum, especially. And then the signals we look at, right? And just be aware when some of the things we're waiting for start to show up. Be ready. One last thing, credit, which we always look at. Again, credit really, again, I haven't seen the updates tonight. They haven't been signaling any calamity. They've been signaling what the market's been doing. A lot of just choppy mess. I'll show you here spreads. Hold on. Here. All right. So if you remember, we talked about a couple of weeks ago, we had that divergence going on, right? These are spreads inverted. Okay. So you should see the correlation with the S&P 500. Okay. So again, before the election, here's risk on, blatant, right in front of your face, right? Out of the credit market signals. Risk on. Okay. Then eventually, market tops out, we top out, and you can see, right? Even as the market attempts to make new highs, credit spreads, just very choppy. Right? They haven't tightened anymore. They widened out a little bit. Nothing signaling any major trouble, but more chop than anything else. And that's what we're getting. Right? So now the equities really caught up to what that credit divergence was showing us. If we start to see some of this stuff widen out, that could be a tell that what JD is looking for, we get that final panic. Right? So if you start to see, again, these are inverted, but on this chart, if you start to see this thing really roll over, that could be a signal for what JD is looking for, kind of some sort of panic low. And then, once we get that, you look for the turn here for confirmation, and we're cooking with gas. All right. Yeah, I'm in the room. I'm on the stream basically all day long. Outside of hopping out of the office here and there if I need to do something. But yeah, and we got a Sunday webinar where we talk about this stuff the most. So every Sunday night, this is where we go over it really in detail, and we kind of cover this, and you ask questions to become more familiar, that sort of thing. The Sunday night webinar is where kind of the meat and potatoes of a lot of this stuff you get to learn. All right. Yeah, GA Trader, we'd be nice to have you back, brother. Nice to have you back. Oh, Girl Trader it is. Oh, Girl Trader. I didn't see. I thought it was a different handle there. Yield curve inverted again. Yeah, so again, these credit market signals are always a nice indicator when they turn too. So we got definitely more than enough stuff to keep an eye on that's going to tip us off. Okay? So let's see how they shake them out tomorrow off some economic inflation data. And again, we'll take it day by day. All right? Guys, always a pleasure. I appreciate you guys spending some time after I was here talking shop. All right, Steam Room folk, I see you mañana, bright and early. And the rest of you, I'll see you next week. Have a good rest of the weekend, everybody.